Okay, hi there, guys. Can you hear me now? Sorry, I was daydreaming there, just searching through some old trades. Bobby, Peter, Pete, Paul, Andrew, how are you guys? Lauren, Peter, Vin, fantastic. Yeah, no volume, Vin, just because I had it on mute. Just let me know if you can hear me. Fantastic. All right, welcome to Trade Setup and the live stream. It's the 2nd of September. So we've got the sell off and the SPY, but a bit later than what I thought. So I'll go through. I'll go through the SPY in just a minute, but yeah, thanks for joining me. Anyone that's new, just remember you can join us at the top left-hand corner. That's our Twitter handle. I've got that down pat now. Top right is Facebook, and the bottom right is YouTube. So subscribe to us at YouTube at TradeSetup, capital AU, and you'll get the good thing about that, you'll get a notification of any live stream we start, whether it be through TradeSetup or anything at all that we go through YouTube. Now, let me get rid of that. Oh, by the way, does anyone know how to maximize this? I used to be able to, and I've cleared out my computer, had problems, deleted a fair few things, and now I can't seem to maximize this onto the full screen. I just can't do it. So anyone got any idea, just let me know. Let's get rid of it anyway. Now today we'll go through some bits and pieces. We had a good chat this morning. Probably needed to go on about the markets too much. The ASX opened relatively flat. It was down, it did bounce after the open. It was down about 10 or 15 points, and the SPY you could see was bouncing at the time to where it closed on early hours Saturday morning. Now I was expecting a bit of a sell-off, either on the ASX or the SPY. Generally the SPY. The ASX did drift back to sort of break even just after the open, I think, which we'll have a look at now. Where am I? I want to go here. I want to go to that 5-minute chart. On a 5, yep. So that's actually scatter 1. 1 minute, there you go. So here's the open. Basically, you said it was going to gap down a bit, open probably 5 points, if that, probably flat. But you could see it sort of bounce back up, pull back, had another bit of a rally, which we saw on the SPY. And I think at this stage I was short in the SPY, bought it back, and I was looking at it long, just didn't take that long, did pop up. But that sell-off has come a bit later after, what was that? Probably the Asian Open. Yeah, somewhere after the Asian Open. So it is down 26 points at the moment. To maximize, all right. I'll have a look at that, Paul. Don't know why. I used to have something to click it and it, boom, it'd take up the whole screen so you wouldn't get the edges on. But for now, that picture just won't happen. I think I've deleted some serious problems there, on my computer. Also, there's a fair few things happening on my computer now. There used to be icons pop up, and now it just says a PDF where the pictures are instead of JPEG. It's all weird stuff. So I've deleted something I shouldn't have. Doesn't matter. So yeah, that's the sell-off in the ASX, and you can see if we just go to daily, it is reacting down from that 66, and I would have expected that. I think it was a bit of a flush on the open, flush out the bulls from the close on Friday, bit of a clean out. They jumped in on the open, market was buoyant, then had a bit of a pop up that we would have got some more buying on the open, just after the open anyway, and then bang, knocked down on the head a bit. Not to say that it's going to get absolutely smacked down, but you would expect that 66. I would expect it to hold because the US is closed tonight. I wouldn't expect too much downward pressure either, because the market at the moment is buoyant because of trade. The talk of potential. Well, the US and China going back to negotiations. Now, like we said this morning, there's no date at all at the moment. And tariffs are kicked off. So, China and the US today have increased tariffs, so that's going to hurt the consumer a bit more. One thing I didn't really think of, it does add to CPI, which is the inflation, and that's probably why you're getting, if that's the case, there's going to be, well, you could potentially be looking at the US dollar rate rise, but it's not really in context of strength. It's just, if you're paying more, it's sort of artificial inflation into the US. But I don't think they're looking at that. They're looking at the GDPs of both China and the US of decreasing a certain amount. Even global GDP is coming off because of the trade wars, which is gross domestic product. So there's a few different, I think, still pressures lingering around. I don't think it'd be too buoyant, and there's a lot of sentiment, negative sentiment at the moment. Now, people say, I was reading an article say something about it's just sentiment driven, but the problem is it's sentiment because the markets are on all-time highs in the US and they've come off all-time highs. Whether or not we, the same with, you can see on the XJO, look at the push up through 868.50, rejected pretty much straight away. So it's really to see whether we hang around here and build a base to move up into new highs. And it is all just conjecture. There's nothing really wrong with our economy, or is there some serious cracks starting to appear and we build a major lower high and then head lower? They seem to think that obviously mining with a weaker Aussie dollar is going to support mining. There's going to be, but it all depends on demand, which is going to be good eventually longer term for our economy. If the miners get supported with the weaker Aussie and the demand for iron ore, whatever it may be, which is going to be a good flow-on effect to our economy. We'll see how it goes. But anyway, trade what we see, not what we guess. So I like reading that stuff, but I tend to stick, in times like this, stick to my technicals, what I'm seeing. And at the moment, I don't see this sort of price action. Let's just drill down this a bit more. I probably wasn't as confident. I wasn't really as confident this market getting smacked around. After this little bounce was rejected off this low at 64, and we've actually come up, we've taken out this high, taken out that high, but I sort of saw that and thought, well, if we're going to take out this high, we're going to take out that high probably because there's one straight back up into it, and that's really the anchor to the downtrend. If that gets taken out, we could have a good pullback, build a higher low, and then, like I said, start targeting up towards the highs. So I would prefer to have seen a big sell-off, a bit of a grind, like we did, mentioned quite a few times now, back in here, right here. That sort of push down, clean out a few of these longs, built up a few longs in here with this push down, and then that sort of grind back up, hold under the MAs, and then down, which after Friday's action, look, that may or may not, that may have been a bit overkill on the upside because, window dressing from funds and bits and pieces coming the end of the month could be the case, and we might get a seller from here and might readjust. I mean, who knows? But I was expecting more of that grind up, like we've spoken about, and it's different. Let me just get rid of this. That grind up when you get the sell-off. Just change that a bit thinner. So the market's heading higher. You get that sell-off. Whoop, bigger than that. Big sell-off, takes out the anchor, and then you get this sort of grind back up. That's not confident buying, and then boom, down we go. That's what happened back in sort of September, October. This time we've come down and then just sort of chopped around more than anything, and we're sort of sitting about here now. I mean, two things: you could just, pop up, pull back, wash out a bit, and then go again, and then it's really more of a buy as we start to lift and attack these highs up here. Or from here, we could just plow straight down, and then you'd be looking for that sort of weakness on a lower high as it takes out a few of these lows, and then people are just starting to adjust to be more of a bearish market. I think we're right on the cusp at the moment, right where we are. I don't think I'm favouring this type of price action, but again, there's bulls out there. There's everyone. I mean, it's the bulk of the market we have to worry about, not individual opinions. So that's why I really do like sticking to my technicals and seeing what the bulk of the market's doing, what they're saying to me. So yeah, it's not, this action's not what I thought. I thought we were getting something like this, playing out a bit of a grind high and then really sell off. But the problem is the market's reacting. We did get this, let's drop that down. We did get fear in the market here, a bit of fear there. But the problem is every time it was pushing down, you got Trump was jumping on the blower and on Twitter and really trying to support the market. And, he's got the ability to do that. Whether or not that message, what he keeps talking about or tries to support it, gets they put less emphasis on it and put more emphasis on the overall market and what's happening. And I don't know. We'll have to wait and see. So yeah, he was at it this morning. Did anyone see? He tweeted something this morning early, pretty much on the open, and the markets popped up, probably knowing that okay, now tariffs are kicked off on the 1st, which was yesterday. People are probably going to be a bit negative today. Let's just pump out a few tweets just to give them a bit of a helping hand back up again. So that's what he's going to continually do. And I think whether the market just starts to look at that and go, well, any sell-off's going to be buoyed potentially, or they're going to forget about what he's talking about and just sell off. We don't know. So we'll wait and see how it goes. All we can do is watch and wait. All right, so that's the ASX at the moment. I mean, I don't want to be loading up long yet. I want to rather see just what we're talking about. If I'm going to be long, I want to see this action, and I think that will play out. You'll get, because right where it is now, I think if it does pop, everyone's going to have to quickly change their bias or start to look at changing their bias, or potentially go, oh, hang on a second, if we do pop up here, you wouldn't want to buy as soon as we break that high, because there could easily be a flush. You don't know, but as soon as you get confirmation off a higher low, which is more in is this sort of thing in here. If you get that higher low, that is the bulk consensus being up, looking towards buying. So that's where you'd want to be starting to get active on the buy side and start to add some, I would suggest. If not, I mean, if we do this, then you're probably out already, or you're just looking at some shorts, or looking at some ASX shorts. We'll be keeping an eye on those, and you might get something, like this little lower high you can see coming into play. Now today we won't fluff around too much into the markets. Just remember the US is closed tonight. That's why I'm sort of not expecting too much action. Today the market's still heading south a bit. It's down 31 points. Yes, US closed tonight. You expect a bit of action in the European session, but not too much. I mean, they ended up on Friday and the US didn't do a hell of a lot during their session. They sort of jumped around, held on to some minor gains. I think the Dow was up, the S&P was pretty much flat, the Nasdaq was down slightly. So, but not a big night either way, considering what's happened in the last few days or weeks. G'day, Gino. Yeah, so wouldn't expect a lot to happen today unless it's event-driven, news-driven. So just keep an eye on Twitter account, log in to follow Trump and just watch his account to see if he tweets something to buoy this market. But he hasn't got much to do. As long as it doesn't get smashed today, then you'd expect him on Twitter. But if not, he'd probably just be waiting until the US opens. Still got Brexit issues, which could be something that people are forgetting about slowly because they're so focused on trade and trade wars and tariffs. Don't forget Brexit. I think could cause a bit of an issue. I mean, it could just be localized to the UK, or it could flow on. If this market starts getting a bit out of hand, which you generally do get a bit of a flow on, you're going to get fear across the board, and then once that sort of fades, then the bigger money takes over, and they're either looking for bargains if the market does sell off for no real reason, or it could just be a trigger. When we don't know, we'll just have to wait and see how that goes too. But I think they're probably going to have a hard exit by the sound of it. But if that's well and truly known, they might be prepared. So just keep an eye on what's happening in Brexit. Hong Kong, there's still issues over there. I think they're protesting on the airports now. It's closing down. I'm not sure exactly what the latest is, but that was an issue a while ago, which sort of spooked the market. I don't think it's a massive issue for the markets, but coupled with something negative on trade or whatever, could really start to drive the market down. But I think as it's by itself, I don't think it's a massive issue just at the moment. But because it's still about, it could cause a bit of havoc in the market if something untoward, they talk, bumping up trade, tariffs, and things like that. All right. So today, I thought what we'd go over, we've got a couple of sent in some trades. So I thought we'd just try it out, see how it goes, put across some trades, win, lose, or draw. And it's probably better to look at trades that you've done rather than, or you've got open. And like, I'm always biased. I'm always happy to listen to someone's critique on because if you're winning, you're generally just winning. Winning's easier than losing, if that makes sense, because when it plays out, you've got really nothing to look at. Your thesis is either right or you got very lucky, but generally your thesis is going to be right of your trade. And there's not much to talk about. It's good. You can always discuss the trade and say, yeah, that looked great. But sometimes I think it's always worth to put in a losing trade to see, or a couple, or a bit of if you're intraday trading a lot, I always found that I just mark up, and I'll show you in a minute, mark up some trades that I did and send it across. And, there would always be probably half and half, or I might have 10 trades, 6 winners, 4 losers, or 5 and 5 or something like that. But generally it was around 50 to 60, around the 60% mark, I think my stats were for intraday. But hearing and talk about the losers and what I'm looking at, and it's really, you're trying to get your iron. No, Pete. No, I know you're doing pretty well. So not a problem. And I think I probably don't mind talking about, your SPY or your probably not as much currencies, but indices because there's a lot more action on those. And it's if you can trade that, I think you can trade shares. Shares are generally, they go in one direction, not always up. I'm not saying that, but they're always biased up. It's harder to make a buck on the downside than it is on the upside. Whereas indices, currencies, things like that, it's pretty much an each way bet because they are margin products too. But you've always got into shares, you've got funds, massive funds, which support, your super, well, it was 9% a month, 10% a month going into the market. But really, by super fund, what do you call it, mandates have to buy into the market. So they're constantly supporting the market. And even during the GFC, that was a bit of a problem. They had to sort of be in, and they were getting smashed because, and I think things changed after that. They changed their mandates, but generally you're going to be 90% in the market in super funds and 10% in cash or bonds or something like that. I don't know exactly what they were, but what they do is, you've got more and more money going to super. There's more and more money to support the shares, whatever it may be. And then, so that's why I sort of say it's biased up. And the trading's a bit easier, but not saying it's easy, but it's just a bit easier than trading, say, indices and futures and currencies and bits and pieces like that because they can be bullied each way, and you get a lot more false breakouts, washouts, and all that sort of thing. So if you can get your head around what price action you're looking for, I'm just flicking around the XJO, but what sort of price action you're looking for to be positive or bullish or bearish on the market. If you can sort of nut it out and generally get yourself on the right side in your indices, say, you're going to be able to do it on shares. Excuse me, here we go again. Sorry about the coughing, by the way. So I think if you can do that, and so that's why I feel it's good talking about this sort of stuff, because even if you don't send out something, if I just yabber on about it a bit and there's something that clicks with you, great. Something that makes sense to you, great. That's where it's going to help. So we'll start off. We've got some from Paul. We've got some from Trade from Gino. I'll start with a few of those. No, actually, I'll start with something I was just looking at then. Just it. So I've got a number of trades. I've got a couple of losses here. Yep. All right. Let's just have a look at that. So this, I don't know when this is. 2011. This is from, I don't know. I just picked it out then. I was running a bit late. So if you can see that, can you see that clear enough, guys? Maybe I can maximize that. I don't know how it probably doesn't look any good, does it? All right, let's just go back. Don't worry about that. Gonna muck around with it. Can you see that? Okay. But anyway, so I mean, we've spoken about this a few times. I would always mark up my trades, take some notes, what I was thinking, what I was looking at, and because 9 times out of 10, if you have a really bad day, when you look at it in hindsight, it stands out pretty clearly what you did wrong. And if anyone can see that first trade, I was on the right side of the market, but the first trade, it's pretty clear what I was doing wrong then. So what I'd do is obviously mark up the trades, have a few notes, and then draw other area like prime. What I've got here is prime positions for shorts. There was obviously a reason. That's where you'd want to be looking for shorts. It sort of grinds up, lower high. After we break the, maybe I can do this, can't I? I'll do this. Take a snapshot of that. No, what I'm doing. Go away. There we go. So you can see here, that was a lower high. You had the market push up, it broke down the anchor, got your lower high in here. That's what I was looking for. So that was just really marking it up. Then you've got, if anyone can see what I normally look for when intraday too, if you get something, it presses down and you get this little pop. A lot of the times you can retest. That's not really going to work, is it? And you get essentially what we call a retest fail, or you call it a double top, whatever. That's starting to fail. Then you've got your entries. You've got a number of entries that you can trade from. Say that there, if you just entered off here with a stop above there, you're on the right side of the market, but so all you're really trying to do is get yourself on the right side of the market. You want to be short, but the entries are the harder bit. The entries where you can get fluffed out, um, chipped in. That's what you want to sort of, I guess, refine your entries when you're trading. And this goes for shares as well. You could jump in a bit late. Like I say, it's with shares, it's easier. And what I think indices and everything else does, it makes you use risk management properly, correctly. When I say correctly, I mean it makes you use risk management. Um, so if you're going short here, you want to know where your risk is. You want to know where you're going to get out. And, if you're shorting it up here, you want to put your stop up there. Okay, it played out. Okay, you could have taken something off, but then you could have turned around and go, oh, look, I'm going to get chipped out there. Okay, go again. Because you don't know if this is just going to blast up higher or what's going to happen. So that's why you need your risk management. I think by trading indices and playing around with uh, what futures or some FX or even intraday trading on some shares. I think what it does is start to refine your techniques. It starts to refine you getting on the right side of the market, that you're looking at it properly. And this is what hopefully, if we can do these sessions a few times, this is what I think talking about your trades or talking through different things will help you understand what to look for, or what I look for anyway, whether it's right or wrong. But to get you on the right side of the market, so when you're on the right side of the market, you can start refining your entries and the exits and things like that, where we're going to, all this sort of stuff. So I think with shares, if you're shorting it, you're going to have risk. You have to have risk. You're pretty silly not to, because it is biased up. But I think sometimes I know there's a lot of share traders out there, more investors, I guess. They'll buy, things will go against them. We used to see some alert service doing that constantly. I'll get these alerts out, pop up. Okay, we bought here and we sold there, we're up 5%. You go, that's great. Go and have a look at the chart and you go, well, hang on a sec, you're down about 30% at one stage and you just held it. I don't believe in that. I'm not a big believer. I think you can always, like I said, you can make better use of your capital. But if you know where your risk is at any one time and you go, well, if I get fluffed out of here, like for instance, if I'm looking at this sort of action, I go, I've got a lower high, I could be into some contraction. I'm looking 1, 2, and I'm looking for a push through that high. Okay, I buy here, I buy with that break, my stop's going to be here, for instance, knowing that that's that continuation pattern that we talked about, but I'm still looking for a break of that high. All right, so I know where my risk is, and if it doesn't, if it comes up here and chops around and boom, straight down, I'm stopped out, because that could be wrong, could be blasting down to support, through support, we don't know. Does that make sense? So you're sort of always trying to define where your risk is, and it could be the same on shares. You go long, if you're looking for your setup, you refine your setup, you're on the right side of the market, it goes up, because you're biased long, and the markets are generally biased long, and say the index is actually going up as well, you shouldn't have to worry too much about it. But if you do get stopped, if it does come around and go through a key level when all that, like the index is up and all that sort of stuff, we're in a bullish market and you get stopped out, you've got to really question why. And that's why I think it's important to have your risk levels, because you can always get back in. But if you have to sit and hold something, who knows how long you're going to hold it. I guess I know Paul trades the blue chips a lot, and it doesn't really happen on the blue chips because there's a lot of, like I said before, funds, super money going into the market, and they're going to constantly buy into those blue chips, especially in a bullish market. They're constantly supporting it, so you can sort of sit around and go, look, I know it's valued. I bought it on a big pullback, and I'm buying it on the rise. And if I do get stopped out, look, I'm somewhere in the zone where I can hold it, and I know that it's probably going to be supported sooner or later. But again, I'm sort of more for knowing where my risk is and letting it go and getting chipped out, not minimizing much, and either waiting for a new entry or making use of my capital somewhere. So talking about all that, banging on a bit, let's move on. What we're talking about this one, can everyone see pretty much what I was looking for? Just delete all that. So the market's basically pressured down. Let's just draw that in a different color. So we had a good run down. I don't think I got any shorts off there. Quite honestly, I can't remember what I did here. But then you're looking, that's a good leg down, and you can see the really pullbacks weren't that bad. They were pretty shallow, but that there was quite a good move down. And then the next leg up, and we're doing this in hindsight, it could have been here. You could have failed here. But all in all, it got all the way back up to, not far off 40.10, these highs. But the whole time, as it's rallying, you go, okay, the rally can be broken down into one, and you go, we take out this high, okay, pull back, high. But what I find the good reason why you're looking for lower highs like this is it confirms that something's going on the downside. Okay, that's a deep enough correction, and you got this sort of chop like we said. So when the market's going, it's biased in a certain direction, and in this case it was down. You can see the strength in the selling. There's not much buying in the way, but then when it starts to go back up again, it's more choppy. It's choppy action, and that's because I think the sellers are still in play. They're still either short. They could be chopping around, getting in and out of some. Taking some off of the pullback, buying some, and just the action. I guess the price action. What I'm trying to say is the price action is a bit choppier. So what you're trying to do, I mean, here you could be looking for a key sort of a lower high. So the way I'd mark it up, look from the anchor, that was broken. Okay, I'd like for lower high to play out here. Didn't really play out. You got this leg just keep grinding up, higher lows, all the way, got through here. Okay, forget about that. I'm not getting my lower high. Same sort of thing. We had this pullback. We had a deep enough correction. I'd be looking for a lower high. I don't consider that a lower high and say shorting it here with a stop up there because it's very choppy. I would rather see that bounce and then form that lower high. And you want to see some sort of weakness come in. With that was just more chop. So that didn't play out. And then we obviously took off and this just rallied straight through this high. Okay, forget about that. It didn't play out there. We didn't get our lower high. What we did get it here. God knows why I actually sold it down here. Sold on the low, got chipped about, what was it, 6 point stop. I think it got to 0.1. It might have literally got to 0.1, 1 point higher, and then fell over. So I was on the right side, but I think I attacked it wrong. So my entry was completely wrong there. What I should have been looking at is looking for what we just described. So this is a really old trade, probably when I was starting to get into intraday a bit and really starting to try to learn the craft. This, you can see that move down, that was a sudden spike higher. So you could, as opposed to something like this, you probably could have looked at that and gone, look, if we break below there, I could have sold it. So I could have got it at the same spot, but knowing my risk was there and knowing I'm coming off a lower high. So I could have had somewhere around 6-7 point stop or even 8 point stop. Got my lower high in plate, which I didn't get it here. I mean, you could have argued that was a stop. You got stopped out. Okay, if that was the case, you've got a losing trade here. You go again, and you've got a winning trade, and that turned out to be, in hindsight, quite good. So you can see that really this was fear of missing out, and you can see that played out nicely on the short side. We got off a lower high, which I'm always looking for. You got this sort of move up, whoops, this sort of stair stepping higher, and then we got the lower high coming to play, just like we mark up all the time, and it played out quite well. So that was just something I ripped out before. Any questions there? Was that making sense? That was a stuff trade, pretty much. On the right side of the market, I guess, but I just took the entry completely wrong, and that's why I think it's important to know what your entries are. This one here is, I guess, like we all do. Buy it. You're buying against the trend. I mean, the trend here is down. The trend is definitely down. You've got the lower highs still coming to play all the way down. There was nothing really changed up until probably here when you got this drifting high, but that was probably still your anchor. And if you put that across and you've got this one move down, you've got a lot of room to grind back up, still holding the anchor down, and then the market just kept holding lower highs. You can see it just happened time and time again. So this was the major trend coming into play. If we draw that up now, you can see, I don't know where that went to, but that was a major trend. Trend lower, contraction higher, major trend lower. So if you're looking, this is a 30 tick. So say this is like a 1 or 2 5-minute chart. The half-an-hour trend, this could be just a retracement half an hour and then continuation of the half-an-hour trend lower or an hourly trend lower. And we're trying to play that contraction. We're trying to play into expansion again. Does that make sense? So anyway, that was one that I looked at. I just popped up there from 2011. Now, there was something looking at today. I'll get to spy out what I did trade today, or where I traded it. You can see this has just dropped like a stone. Now, what I was looking for here, I did trade it just here. And I was having my stop was just above. Now, the difference in that as opposed to potentially, I think I was looking at it here, selling, or didn't play it anyway, with the stop above, was that what I'm looking for is this trend's down, you've got some pressure, in this zone on the way down. The market's gapped down into support. It's reacted off support. Okay, that's fine. We've got a confirmed lower high really up here. This is really, come on, confirmed lower high with a bit of a washout. All right. So the market, all in all, is gone. If we draw that up, just try to keep it. So that's one leg down. We've got contraction back up. You could say it's to here, and then we've got the leg down. So that's the action. So really, if this is reacting higher, we either want to see, like I said, a good higher low play out and pop up and continue on up, which it really didn't do, or you want the sellers to keep coming in and pressure the market lower, which has just played out nicely. So it's ended up with a major lower high, and you've got this sort of action. So this, who knows where this is going to go to? You can see that action. It's major lower high, off this high here. Potentially we're looking to 6,500 or lower. I mean, who knows? But what I was looking at for that day, we had it pop up. The MAs are down. I'm looking into a zone, and at that start, say this trade here, it wasn't really into overbought. I prefer to trade off the overbought with my stochastics showing, and I want to get it off a lower high. So this was more prime for me, and you got nice rejection on that candle. That was at, what was that at? About 10.25. So this one didn't play it. If you went short here, if it did pop through the low of that candle, it's a 5-minute candle, by the way, and I'm looking to take advantage of a lower high. I'm trying to get in nice and early, looking for that lower high. MAs are down, looking for a press back down into that support, or if I'm wrong, at least get a few points up my sleeve before it starts to have a deeper correction. Now, which it did anyway, that was where I went short, took 5 points out. Watch this, but no, I'm out. Was thinking about going long actually there, which was another. Just get rid of that. I'll just go back to rectangle. There was actually a long here, which played out, but it basically went straight back up in that resistance zone. So this zone was in play all morning. And you know there's going to be some bulls, so you're really just watching for it to tip over. I don't see where I could have traded. Probably in here might have been a trade because you've got press down, pop back up, a minor, if you can see this candle was a minor retest of the high, and then you've got a breakdown, so you've got essentially a little minor double top with you can call that a lower high probably, and the market's pressed down. You're taking the risk that you're selling on stop there. Your risk could be just above that, well, the following candle, which was up here, and it never really got into trouble, and you've got this massive sell-off. And really, the way I would follow it down was after candle, 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 the higher that candle hasn't, maybe now you're going to start to get stopped out if that's the case, because this candle is where your stop would be just above the high of that candle, which is about now. So if, all in all, if that was a short there, 65.89 with a stop at around 38, say you can get stopped, say even if at 40. What did I say there? Short at 69 to about 40, so 29 points there on that trade. Is that making sense? Just what I'm trying to explain there. So you've got the overall structure. That's what we're looking at coming into the morning. It's that low has been, or that zone of selling, that liquidity zone, like you want to call it. It was confirmed once we got this retest of the low. It's just whether it was going to hold or whether it was going to break. The market was going to plow straight through it. I was looking at here, looking for a short. It didn't play out, which is good because it actually played out a short here. I knew where my stop was, and I'm looking to anticipate the move back down again. Don't know where it was going to go, but everything was playing out. We're overbought here. I think the 30-minute was actually starting to trend down on the stochastics. The 30-minute chart was, that's actually starting to correct, and we're looking for a major correction. So the 30-minute chart, you've got the leg up. We're looking for that major correction because we've got a lower high coming into play on the 30. Once we got this open down at 90.65.43. So that's the premise, and I'm just looking for a short with all those sort of factors coming into play. Pressure on the 30, the 5 starting to find some pressure. We've got this open, we've got this bounce off the lows. We know that sooner or later they're going to start to take profits. Anyone that bought it down here, bought it on the open. potentially a massive move up on Friday, 100 point up. We probably expect some sort of pressure, profit taking if anyone was long there, especially if you start to find some pressure. It's just where. We're just trying to find out where. And we, like I was looking at the short here, didn't play out, okay? No skin off my nose, it doesn't really matter. It's a deeper correction, we got a bit higher. So the odds of a profitable trade, especially when the MAs are still down, sharply higher, started increasing. Okay, I did short it there, took it out at 5 point gain because we started getting this chop and we started holding up and realizing this was the anchor to this up move. We're holding up that anchor. I thought, okay, the odds are starting to increase that we're going to get it deeper. We're going to go a bit higher and wash out these highs. So I'd just rather bail. And I didn't do anything after that. But that was the reason for the trading. And as it's played out, the short was later on. So that's, I guess, just a breakdown of a trade. Does that, any questions just on that? Does that make sense? Or am I just talking stuff you're not interested in? So we can go over to, we've got some of Paul's stuff that he's just sent through. He's got a couple of positions. We'll just stick to the ones that he's closed. He's got some that are open, but we'll stick to the ones that he's closed. And they're on shares, so we'll have a look at those. But you can see this. So if you're trading intraday, there's opportunities on the ASX. You just got to piece together. This is what I guess we're trying to do in the morning, is piece together what we could see intraday on the ASX 200 or the SPY 200. So we're trying to piece all that together, and that's only going to help the day's action for the ASX. And it's just good practice too, at the very minimum. If you're just trading shares, it's good to know these sort of stuff, I guess. I'm always handy to learn anything I can because I know it can't hurt my training. It can only help understanding why things are moving, what's going on, and all that sort of stuff. So that there would, I don't know if what we're talking about exactly this morning. We're talking about a bit of pressure coming to the markets, which it is on the ASX. So we're down 43 at the moment, so it's not looking too healthy. I don't know if there's been any news. Does anyone know if news have come out just to keep driving this market lower, or is it like we were talking about, the end of month index dressing, and we're getting that sell-off now, the start of the month. We're getting a bit of sell-off to start the month and then see what happens from here. Bit of window dressing. So it looks like that was the case on Friday, bit of window dressing. We come back, we're potentially coming back, that 66 is holding. We're coming back to a more, I guess, even keel, but we'll see. Let me just find what, oh God, I've closed it, didn't I? Find a couple of Paul's trades. If you don't mind, Paul, just let me know. I'm pretty sure he's happy to whack them in. And we got one from Bobby. So Paul trades, anyone that doesn't know, is trading more your blue chips. And he's got a couple of good ones. So we'll go through just four. We've got EVN, Evolution Mining, Goldie, Newcrest Goldie, VRT, and ASX. Now, I'm just going to check out where they're both first two in March. So May, sorry, got in around, say, here somewhere. Now, don't mind that. And I think for me, I probably would have gotten a tad later. I mean, if I was watching it, I don't know why I didn't look at the gold. Couldn't answer why that. I think I'm not sure whether on SLR at that time, but really didn't take advantage of that gold move at all. So it was a bit stupid, but that's the way it is. Paul, good work. So in here, just taking a look at that long-term structure. I mean, that's up. Where is that? Let me just check something. It was in here, wasn't it? It was about here. Okay, let me just check. Best fit. May, it was about here. All right. So you can see that longer term structure was up, and Evolution's done well. The grind up. It took out this level, which is, once we got this high, look at this overall structure. That's beautiful. So the premise is, if you got this, I think this is probably where it opened. This is way back. So this is a longer term structure, but it shows the picture quite nicely. IPO pushed up, squeezed out some of these IPOs. They took their profit, whatever. The longer term buyers starting to edge in at lows. The real committed buyers popped up, got to, again, this previous high at $2, come back down again. So this is all over a matter of years. And then we started getting, with this move up, we cleaned out this high and this high with this pop up, and we retested up into this zone at $3. So that was a cracker. That was back in 2016. And then we pulled back to the MAs. So you can start to see this rejection off the MAs is suggesting after the break through 2 is suggesting higher levels. So if we go into the weekly, that was about here. Okay, grind down, and that's essentially your two legs. One, consolidate here. Two, a deeper correction, but the MAs are still up. So you've got a deeper correction, and all that's engineered to do is to wash out people. It's just to clean out some people, put them back on the sidelines, and that's your weak hands, what you call your weak hands. Anyone that's probably a shorter term, looking for a shorter gain, all that sort of stuff. On this pop, they might have bought it here, popped up. You know your stops can probably be below this low if you're wearing stops, or below here. It was targeting just to squeeze out some of the traders from that rally. Squeezed them out, settled down through as 2017, and started to lift again. And that's a nice little lift. Pull back to the MAs. It was below on your weekly, but still, it was starting to lift in here. And I think the trade was just back here. So all we're saying is that it continually comes back down below the weekly MAs, lifts again, trades into new highs, back down below the MAs, trades into new highs. Again, same rinse and repeat on the weekly. And still, it started to get a bit ahead of itself up here, and we've got a nice rally. But for me, Paul, what he's doing here is just really trying to trade, looking at that weekly. You've got this low, and on the weekly that corresponded to here. Same pattern below the MAs. The MAs are still up, still trending higher. That's happened before, and then we led to a rally which took out the highs. So at this stage, you could be looking at that going, okay, we're going to take out the highs here, which is at higher 408. So, and it pushed through that high, and he's really just a nice little zone on the daily. You've popped that back up to MAs. We consolidated. So I would have more inclined to trade on this candle with my risk below, because you can see it's confirmed that we're holding above the MAs and we're starting to lift. Probably took a bit of pressure here, but you wouldn't have really moved your stop. And then we started to get this lift, consolidate. But the whole time we're consolidating those MAs on the daily and grinding higher. So good little trade on the right side. Not much to say there, I guess. I don't know what the volume was starting to pick up through here, but the volume is pretty consistent. It was pretty consistent the whole time. But yeah, it's a cracker. That was a good little one. What was the other one? EVN Newcrest. It was Newcrest, wasn't it? Newcrest, same sort of action. This is what we were looking at for a long time. I don't know if we did. I think we did trade it. We took something small out of it, but missed the bigger move, which was, I guess, stupidity on my part. But yeah, we've got in May again, same sort of action. Trend is up on the daily. Trend is lifting. You can see we've got. Let's just look at this breakdown on the weekly, because I think this could help on trying to anticipate where things could be going. So this is your structure. Okay, trend down, consolidate through here. You can see, okay, we broke out. So that for me that's a leg up. And if you could take it from here to here. Oh, I don't know. No, I'm not going to be able to do it on this program. Anyway, then you start consolidating, and you've got this type of price action. You're looking for, that's contraction. Okay, once you start getting that over, it's a long period of time too, but you know that if that starts to break high, there's going to be a good leg in this one, and you could probably measure it from the low to high of the previous leg. Low of about 8, say up to about 26. Was that right? Is it 16, 17, 18 bucks? So if you take it from 20, it's a 38. So that's roughly where that leg went to. Not saying it's finished yet, but if you're looking to buy up here, you just got to take note that potentially this leg's running out of steam. We're into these highs at around 40 bucks as well. Not saying it can't go through there, but this is just all adding to your probability. If you're holding it long, what you could be coming into a bit of pressure, or you just tighten up your risk, let it go, see what happens, which is a good way to attack it too. If you just see what happens, it could break through, you don't get stopped out, and up she goes, it just keeps going. Or do we look for another correction like that, something where it's going to correct lower, clean out a few of these late buys, put them back on the sidelines, reset, and then look for a high line on the daily, and away you go. But that weekly was, some nice price action. That if you're looking at it this stage, even I think Paul was trading it in here, you're looking at that, we've broken up out of contract, what's going to happen. you know that potentially this is the trend we're looking for. We're looking for something, probably didn't expect it that fast, but we're looking for leg up, correct sideways, or slightly down, and we're looking for the secondary leg up. We measured that. We've got the potential that could go to 38 to 40. We're only sitting around the 24 mark. We've got small risk. It's at least 3, 4, 5 to 1 maybe on that trade. Does that make sense? If you just go down to the daily, it was in here, wasn't it? May. Paul was trading in here. So again, I would have probably waited towards the end of May. Take it on the break of the high. My risk is below. I know that I'm getting continuation on the daily. The weekly's confirmed. It's sort of blue skies. Excuse me. So it's on the 15th, which was that green candle there. So if you're trading, for me, if I bought it on the 15th, I would have, off the daily, I would have been looking at my stops below that low. What was that? Say below 24.40 thereabouts, $24 even. Stops below there, because if I get stopped in there and if I get stopped out, something's wrong. I've got especially when you were taking out this high, you can see you're trading here. That consolidation there actually took out that high, and it was starting to consolidate. Any weakness, it should have been a spike straight back down. That's what happens generally. You get I can't show you on this chart, but you tend to get this action. If that's a resistance zone, and we've come up into it, and it doesn't want to, the market's weak, you probably spike through it, and then you end up straight back down again, and then you're looking for a lower high. That's what sort of price action. But instead, when you go through it and start to consolidate above, that's a positive. That's positive. That's pretty much what it did through here. Consolidated above that high, up on the, sitting on top of the MAs on the daily. Volume's good. Volume's not easing. It's been consistent, good volume, and just looking for that to rise, because the weekly's in your favor, the daily's in your favor, and away you go. Saw your comment, Paul. Yeah, that's. I guess it was good to talk about, because I'm not sure what drove you to jump into it, but the weekly's in your favor, the daily's in your favor, and all we're really talking about is the different entry styles. You're picking the right stuff, you're picking the right direction, and it's the entries. I'm not sure how you're entering, but I'm just explaining how I would enter and where my risk would be, and that's it. You would have got better prices on that one, but excuse me, but I think it's just, and entries are probably the hardest thing, and they're different for different people. Everyone has a different sort of entry criteria. Everyone has a different mentality to trading. What's comfortable for them, what's not comfortable, what risk they're willing to take. All these factor it in. But if you can practice getting on the right side of the market, great. And that, nothing going to say there. The weekly, you can see the weekly's lifting, consolidating here, perfect. That was around May too, April, May, consolidating. So that sort of price action, a weekly, you've got to be biased up around here, and you go, oh, okay, the weekly is looking great. I just want to take advantage. You've got this pullback here. Look at that. The pressure from the sellers here is not met with negativity, because the price is going sideways. So if you've got pressure from the sellers driving the stochastics lower, and don't forget, I'm only looking at that really as a pressure gauge between buyers and sellers, and the price is going sideways, you know that sooner or later the sellers are either going to give up, especially in a stock. They'll probably give up and stand aside, because if the selling pressure is trying to drive it lower and it's just not happening, it's getting soaked up. Any sort of seller is getting soaked up, and it's going sideways. If you're a seller, you just go, bugger it, I'll stand aside. I'm probably going to get a higher price. If I really want to get out, I'm probably going to get a higher price. And the more people that sort of decide like that, and the buying pressure continues to be the same, you've got less, how would you say, explain it? You've got less headwinds to get that price to move, because all of a sudden there's less sellers aboard. You've got less, say, on the offer, the same amount on the buy side, and then that buying starts to take over. And that's what you're looking for. When the buying pressures or the selling pressures are easing and the buying pressure is starting to kick off, because that way you're probably going to be on the right side of the market. You don't have to take any pressure, any heat on your trade, and then you can just ride it higher. So that's the theory behind it. So if that makes sense to you, that's how you could start refining entries, picking apart your entries, and it's good to see why you got in also. So that's those two. VRT, what was that one? Was that a recent trade? 7th of the 6th, 420 out at 15th of the 8th. 7th of the 6th. So it's somewhere there. So that green candle just here. That's good. You can see you've got an ever so slightly higher low here. It's starting to lift again. Not really supported with volume. Stochastics are down, meaning that selling pressure. Let's just drill down on that. So what I'm viewing here, I mean, only Paul knows how he's viewing it, but what I'm viewing here, if I can draw that up, what I'm viewing here is this is the low. So any weakness, continued weakness should take that out. You know? So that's the lowest in place. You've got lower highs. Well, I could probably say that's a lower high coming into play there. But look at what you're looking at is the longer it takes to go down. If it was a weak market, yeah, you shouldn't take that long. You should just go boom straight down. And the angle of descent should be a bit like that, as opposed to a lot steeper, as opposed to that where it's a lot less steep, if that's the word I'm looking for. Okay, so the way I'm viewing this one is that as you're grinding down, you know, really you're going, well, what if this holds up? You know, if this turns into a higher low. So at this stage, you're looking at it, say late, well, let's not even say that, by the end of the month. Say you're looking at this stage, you go, well, if this holds at a a higher low, what am I looking at? I'm looking at a higher low coming into play here as in regards to the 380 zone. A high low above that was around 385.90. If that holds, what am I looking at? I'm looking at pressure from the buyers, okay, starting to be applied. I don't know if I'm in the right zone, but is it worth having a nab, buying into that? Which I think this was your entry. Was that the candle? Did we say the 7th? Is that right, Paul? Was that the 7th? It's the 7th, yep. So that's the candle there. No, it's the candle there. So it's a big expansion candle which drove it up. So that candle there is where Paul entered on the 7th. So by then, you probably could have refined your entry slightly. You probably could have been looking at, well, if I take out there on that candle, say pretty much on the close or during the day, you could have had your stop just below. I mean, anyway, but that's what you're trading off is that higher low coming to play. It's broken through some key levels, especially on this day. It's taken out here and here. So you've got these sort of lower highs coming to play, which it took it out, and you've got a higher low coming into play here. So there's quite a few. And the way it started to take off, I don't know if it's news driven or what drove it. The buying pressure really increased. I don't think you got much on the side of you didn't get much on the side of volume picking up. But yeah, that's definitely, it wasn't my entry style, but you definitely got on the right side of that. I probably, on hindsight, I would have got in right up here. I find this a really good, yeah, that's a nice entry straight through. That's that higher low we talked about, and that would have probably been where I got in. I would have been sitting there just, what was it, from that high, and it was a trigger sell, yeah. So yeah, I did well on that one, and then if you didn't get out on this candle, you could have, I would have been stopped out probably here. It might have taken something just depending on what the gains were. But yeah, that you can see that trend up. This is where it ultimately rolled over. Once you got this smashed lower, took out this key level, it did get back up, so it ended up on the day, did trade back up the highs, and you got a couple of reds. That's, you know, that's a short double top here, lower high coming to play. As soon as you got through here, if you were long, exit. If you wanted to go short, you could have gone short. Then you can see what happened. It just got smashed. But yeah, that from here to here, good return. If that's what you're looking at, if you didn't get out here. So anyway, I thought that was quite nice. So that's it. Let's just see. I know Paul had one more, but I just want to see if we can get onto Geno's, because this is probably, we'll just see how I'm going to do that. Any questions there, guys? Yeah. Now that was a cracker, Paul. I think what I'm liking seeing, I mean, whether or not we've got different entry styles, doesn't matter. You seem to be on the right side, sort of at the right time, which is all you care about. Because if you can get on the right side of something that doesn't really cause any pressure, it doesn't really matter how you enter. The entries for me are more, I look at entries as more relieving the pressure if it does look right, but it doesn't turn out to be right. So I think your entries keep you at that extra bit of trouble. When it's going to go right, and if you just dive in, fine. If it's going to go right, it's going to go right. There's going to be some that, okay, they break an anchor. Say, I can't even see it on here. Say up here, You go, okay, I've got a high here, press down. I'm getting in here, you know, with my stop way below here. It just stop you from this heat. All your entries with knowing where your risk is just stop you from taking that heat. Or it can keep you out of a trade like the short I was talking about on the SPY this morning. I didn't get in because the setup didn't play out, and I got the setup a bit later on, probably at 10, 20 minutes later. So that's what I think your entries can really help you, keep you out of trouble, just that bit extra too, and it starts to put in more prime trades or higher probability trades. But if you can keep on the right side of the market more often than not, at the very least, you get a 50-50 strike rate, I think. And if you can constantly get 2 to 1, you're in a winning scenario. What am I looking at? I've already forgotten. I was looking at, no, that's not it. Bobby had, oh, here he's got it. Was it US yen? Am I right? No, US CAD. Have I got that? We'll just get up the US CAD and then we'll probably, oh no. There we go. Right there. So what am I on? You were looking at a weekly and a daily. Let's start off on the weekly. I don't think I've marked this up at all. And then just go, oh God. Now this, I think you're in here, aren't you? 133.15, 133.15, okay. All right, I'll mark up what I'm seeing. So this, you obviously, let's just do it on the other chart. I think this is a good one to have a bit of a talk about. So you could go long or short, which I think sort of makes sense. I'd be biased sort of on the short side because only because you got the stochastics, but whoops, you got the stochastics sort of playing out here. It's get bought up, but you're falling short. You know, you look like you're going to start holding another lower high. So that's why I sort of be biased on the short side. You've got last time, you know, we're up here at this high stochastics, up at this high stochastics. So the buying pressure pushed up, running to some selling at a lower level. Potentially we're running to some selling at a lower level too. The stochastics are going back to the overbought scenario from oversold, but it didn't get too far down on the downside either. So it's kind of, at the moment, I think it's starting to set up. USCAD. So for me, that's your massive move higher. So that's your leg up. You know, you're getting expansion, bit of contraction, expansion. You can just see the power in the moves up. So that's a clear leg up, right, on the weekly, the US CAD. Then you got this massive pullback. So that is different to anything that's happened before. You can see here and here. That pullback is different. Now look at this action here. So that action, you know, is choppy. That's exactly what we're talking about. I'd love to have seen on the on the ASX, and then it sold off. So that is some clear corrective action. You got 1, 2 legs. This is on the weekly, don't forget, but it's all very, very similar. One thing I do notice is it did hold up that 120. So that, to me, that's your most recent anchor to this uptrend. So at this stage, what it's doing, what it looks like it's doing, is it's still correcting. I don't think we've just finished yet. This is just off the weekly. So you've got to remember, I think Bobby's looking to enter off a daily, and he's just trying to break down what's happening on the weekly charts. So you've got a big pullback, secondary pullback. You pretty much retest that anchor, and we started to lift again. Now, the next thing coming to play is that high. So that's the high we've come straight back into, and we're starting to fail again. So that's why I'd sort of be looking to potentially, that's a double top here. What have we got? US CAD. So for the US that to spike high, you want really strengthened US dollar compared to the Canadian dollar. Whether it does, I don't know. If the US dollar sells off, for a second, it's going to drive price lower, obviously. So you've got this sort of, for me, it's more sort of this scenario. We're capped here, we've touched it, got these lower highs coming into play. So for me, I'm sort of looking, I'd be biased more down, looking for an entry. That's just, you know, what I'd probably be looking for. And you're obviously dropping out to a daily. You can even refine that a touch lower. Does that make sense? So we've got all this structure, bigger, longer term structure in play. And we're right up into this high, which it failed from. So we got, you know, failed from these highs, straight back down to the anchor. After that corrected, straight back down to the anchor. This action's like this action. It's a grind. It's not sharp. It's not sharp up. Where a sharp suggests, if that sort of spiked up, you'd suggest that, okay, the bulls are starting to come out. This is the key level. It's going to drive some bullish price action. We should be driving at least straight up to the highs, pull back, high, low, and then off we go. But instead, we've driven down and we're starting to grind again. So there's still some selling pressure. Okay, so there's still, look, some selling pressure to either work out of the system to work out, or it's going to drive this market lower. We could be coming back down here. We could be coming back down to retest 120, or we could just be sort of chopping down and hold a key higher low and then start to lift. But either way, I think there's a trade on the downside. So if we go down to the daily, let's just go down to the daily now. So I'm at 105, so we'll probably just have a quick look at this and then see what happens. You can see the daily, we're starting to get overbought up here as well. So bear all that in mind. Let me just draw these levels in. That's your high there. You've got sort of this lower high coming into play. Whoops. And then we really just retested that low. I wouldn't consider that as a key, oh, come on, as a key breakout. So if we take all that into account there, you can just see how key high, lower high, and if we're expecting this to hold a lower high, where would we want to be getting short? I'd ideally just want it to tip over, something like this. I find it hard to, actually, you can see this price action here. We push through this high, bang, straight down. So we might, if we wash it out and start to head south, there's a short potentially through these lows. That makes sense, because we've got this high that we want to hold up. I'll draw this up. So this is what I'll be looking at. So you've got, that's the high. Okay, this is only a minor scale, so this is what we're looking for from the weekly. We want this to be another lower high like this. So this is the zone. We want something similar. You know, that's your lower high off this key zone, lower high, lower high. We want this to be again. So we just want rinse and repeat price action. So if we're drawing all this up, to me, we're starting to fail. So what's happening is this should hold a lower high, sorry, a higher low, and be, if it's strong, and just grind up. All of a sudden, we've come into some selling zone. A selling zone, say, whatever, 134, somewhere around here. This sell zone here, and we're starting to find sellers coming in, and then the push lower. It reacted back up, but we're watching for another push lower. So ideally, you'd like to see something like this, drive lower, you know, maybe reaction back up, and you get that sharp move lower. And start to get it off. I'd ideally always look for, I would, off a lower high. So we've got a lower high in here. I'd ideally look for something, you know, pop back up. If this plays out, great. And then we could, on this third lower high after weekly, we could drive straight through that support at 130. So either way, so what's that, 300 pips in play? So you just got to know where your risk is and what action, because if you just sell on a breakthrough here, this could easily wash out and it could just drive back up again. Does that make sense, Bobby? Does that make sense to everyone? So at the moment, I don't think anything's played out, but I think, what if I'm right, Bobby's looking to sell, where was it? Go short, price goes daily below MA12, stop loss will be 133.45. It's about here, so stop loss is about here, but short potentially through here, I'm guessing. Okay. I wouldn't put, as a bit of, I guess, wouldn't put too much emphasis if it breaks through the, what do you call it? The MA. Stop loss will be, okay, go short, price closes on a daily below EMA 12, so the 12-day EMA. So it's like it's closing down here. This could just continue the chop. I'd be more inclined to see it take out a level, because when they take out level, closing with the MAs, it doesn't put any pressure on anyone. It could just do this, close below here, you go short, pop back up, and it could just turn around and spike back up, stop you out. I'd be more, ideally you want to, I think, I'm probably just being, I could be being arrogant, you want to base your trading around pressure. Where's the pressure on the, because ideally when you might enter off a level, but where you're going to feel the pressure, you're not going to feel the pressure because of an MA, you're going to feel the pressure or when you're down, and everyone's exactly the same. And where if you short it here, where you're going to feel the pressure when it starts getting up towards these highs or through the highs. And if you get through the highs, you might not get stopped out. You might get stopped out. I just think if it gets through these highs, it's either going to be a washout and drive back down. You might get lucky, or it's just going to continue on up to this resistance zone at 135. And if that's the case, you'd rather be out earlier than 45? Does that make sense? So I'd be looking for just what we said. I want to see it sort of, I'm inclined to believe it's going to wash out this high. It's going to basically go up. And if it comes straight back down like that, yeah, I think the trade's on. And then you'd be looking for that retracement, pretty much like this, that retracement you get into. And then you can essentially get in on, see this, I'll have to draw it here. If you can see what I'm talking about, this candle, this red candle here, because this is a lower high, I would be happy to trade off the break of that candle on the low. Just to really drill in what I'm talking about, I'd be happy to break. This is the candle that's coming into play. Oops. So basically, stops on the bottom end. Entry stop on the bottom, buy stop on the top. Does that make sense there, Bobby? Does it make sense to everyone what I'm just talking about? And that's because that's that area. I'm trying to front run that lower high. Here, if you were going to trade it around here, if you're looking this red candle, stop below, potentially. Actually, I want to get rid of that. I want to draw that up on the other one, just so you know exactly what I'm talking about. I'd be looking at this. So if I like those candles, that sort of expansion high stop, I would ideally like a stop there, or even, stop on the next red candle. That's an entry. Okay, that's probably a prime entry is the second one. Okay, so that's your first red candle. You're on your daily, we're on a daily chart, I think, and then your stop just goes above. Done. You're not risking too much because the premise is that that's your lower high. It's formed. That's your lower high here in respect to these highs after we've broken down with this leg. So all these sorts of things. That's your lower high. You're going to be on the right side of the market. The MAs are down. You're coming off here too. See how it all adds up? And then you're getting on the right side. You're not taking any pressure. But at the moment, let me just get back to here. Why isn't that? At the moment, if you stop with you using your MAs or anything, nothing's really proven just yet. So I'd ideally, that would have been a good entry. And well, just looking for the same type of thing. All right. So I think that's a cracker there. And you can see it only drove down, but by the time, if you're just following down MAs, you probably didn't get any grief right up until here. So if you had a stop here and your next candle, as soon as that starts forming, your stop goes down to here from here. That's your first move. One. As soon as that candle finishes on its lows and you get the next candle start to form, your stop's in profit. All right, and then you could just follow it down and give it a few pips leeway. You could follow down. That's sort of the tight way because you're coming down to a resistance zone. You're really trying to keep your stops tight, and it's come straight back down, and you've just bang. Okay, you got out on this green candle. You've got out somewhere around here from 130.10 from 30. Let me just see. 33.67 down to 31. So that's a couple of 100 points. Does that make sense? I reckon that's the sort of entry, and that comes off. You're coming off that high. You've got this breakdown, straight back up, lower high coming into play. squeeze out this leg and squeeze out, further buys that probably held through this. You're looking for that secondary leg lower. Ideally, you probably were looking for that to break, but instead it held up. You got stopped out. You made a gain, and you step back and reassess. So if you're looking, so I'd say now we're somewhere potentially around here. Just as a guess, we're around here. If it's the same sort of thing going to play out, so we haven't broken the anchor yet, I'd suggest the anchor's probably, look, it could be right about here, 132.28. So if you get it to start to press down, if it really takes it, not just by a few pips, but say 20 pips, and then bounces back, then I'll be looking for that lower high to come to play and then short. I could be completely wrong. If you're buying a break through the highs, your stop's going to be below here. And just to see, hopefully you don't get stopped in a washout and it rolls over. I think buying might be a bit tougher because the weekly charts are actually a bit extended up here. So if you're trading from the back of that weekly, as a buy stop, I think you don't have a high probability trade, but you do on the downside if it all plays out. All right. Thanks, Pete. I've got to go. Oh, sorry, mate. Sorry to hear that. Yeah, we better finish up there. Hope you enjoyed that, guys. I know we didn't talk anything about shares, but it's probably worthwhile just having a bit of a look at different things. But trading is trading in my book. You're still looking for very similar things, whether it be lower highs, higher lows, but you're looking for that same price action. So all I think it's really trying to do is refine your trading from a technical perspective. If you're looking at, something like Paul's probably looking at fundamentals here, and look, there's a fundamental reason for buying it on its lows. Let's just trade that. Buying it here on its lows, and he's going, okay, great, fundamentals are good. And he's just really trying to refine his entry through your technical analysis. But either way, I think entries are important because it refines your risk, exactly what you want to do. And then I think longer term, that's only going to improve your trading. It can't be negative, if that makes sense. And talking about what we did, whether it be the currency, it's the same principle. If you got this massive consolidation through here and you're looking at this and you want to go long, you got this lower high coming to play, it broke down, you'd be going, hang on a second. You can see that, and if you didn't get out and you saw this power down and you saw this bounce and then you start getting another lower high coming to play here and you're still long from in here somewhere, you're better off getting out because you don't know what's going to happen. You can't say, oh, look, I'll just keep it. I'll put it in the bottom drawer and I'll forget about it because it'll eventually come back. What if it goes? I mean, everyone must know stocks, a lot of good stocks that have gone broke. Look at Lehman's. Who would have ever thought Lehman went to the wall? But they did. That could happen. And I would always protect myself, always prefer to protect myself from that outlier event. Because that outlier event, if you're trading a stock that's it's only $5.60, but say it's a $40 stock, you put in quite a bit into that and you don't stop it out, it goes broke, you've lost everything on that stock anyway, on that one position. And I guess that's where, if you're a portfolio trader and you risk across a number of shares, great, that's fine. But I think you always want to focus on risk on each individual trade, each individual share. And I think that's going to benefit, it's only going to help your overall statistics longer term. So this one, like we're saying, if that's powered down, as soon as you get this move that starts playing out and it breaks down through 5 at this stage, right here, you'd be nervous. You're going, well, that overhead, that selling pressure is winning, and the buyers just got creamed on this move down. At this stage, maybe you could say, well, I don't really want to trade. I don't want to put my stop below that low because this happened and it bounced back. So it could whip down, bounce back, take out the highs, and away it goes. So you don't really want to do that. But as soon as you see this coming into play, it bounces back to the MA, it starts holding a lower high, you'd probably want to be out. You'd really want to be knowing, potentially just getting out or putting your stop somewhere. If you get tagged, I'm wrong, I'm out. But you've got to know where your risk is. And I think when we just talked about this currency, where was it? The USCAD, it's the same sort of process. I've got it here, haven't I? Same sort of process. You're doing the same process. It's all the same stuff. I mean, that with a lower high here is exactly as what we got just here. Same process. So the price action's the same, and that's why I'm always focused on psychology, because your psychology, a FX trader doesn't have a different psychology than a share trader or index trader or whatever else there is. Everyone's got the same. You feel the heat when you're under pressure. When you're losing money, we react very similar. So I think psychology is a big issue in what can drive the markets, what produces the lower high, what does this, what does that. And that doesn't change depending on what you're trading. It's all the same. So if you get into sort of that habit of what you're looking at, I think you can attack a lot of different markets. Anyway, I'll finish there. It was a bit of a sermon. I hope you enjoyed that. feel free to send us an email if you have any questions to support@tradesetup.com.au. If you like what you see, it'd be great if you can leave a like on the video and spread the word a bit. Tell some other people you think might be interested. Anyway, thanks very much, guys. We'll speak to you again next Monday, or if you're in on the morning thing, tomorrow morning at around 9:45. Cheers, guys. I'll speak to you later. Bye.